It's business time here on Live from Paris now with Stephen Carroll. Hi, Stephen.
Hello, Catherine.
We're going to start in the United States. The ratings agency Standards & Poor's getting a big fine. What's that for?
Yeah, that's right. They have to pay almost $1.4 billion for their part in fueling the subprime mortgage crisis. It's the first time that a ratings agency, which are of course meant to provide warning signs over risky investments, has been fined over their involvement in the 2008 financial meltdown. Standard & Poor's owner says the settlement agreement doesn't say that they broke the law. The case taken by the US Justice Department and 19 states claims that S&P had fraudulently given top-notch credit ratings to mortgage bonds that they knew included loans unlikely to be repaid. Here's the US Attorney General Eric Holder.
On more than one occasion, the company's leadership ignored senior analysts who warned that the company had given top ratings to financial products that were failing to perform as advertised. Now, while this strategy may have helped S&P avoid disappointing its clients, it did major harm to the larger economy, contributing to the worst financial crisis since the Great Depression.
Now, as big oil companies have been cutting their spending plans, we've seen a rally in the price of oil over the past couple of days. Let's take a look at how the Brent crude index, the benchmark price for oil, is trading today. Down slightly, but still massively up at over $57 a barrel over the positions that we've seen. Went as low as 46 in recent weeks. It's in fact the highest price oil has been since December of last year. The news coming after oil giants BP and BG both announced they'd be cutting spending and warned of tighter oil supplies in the future, seeing some rally finally on the oil markets. That's, as you might imagine, helping shares in oil and gas companies on the stock markets today. The European markets have generally opened up. London's FTSE 100, just slight gains there, but the oil and gas shares, of course, many of them listed in London, are seeing a slight bounce in trading. The Frankfurt DAX just trading slightly down. Here in Paris, the French luxury group LVMH opened up 7%. That's despite reporting a fall in operating profit for the first time in 5 years, but its fashion business doing well. Sales there up by 5%. Over in Asia, we've seen the jump in oil prices give a boost to some of the markets as well. The Nikkei in Japan closing up almost 2%. Let's move on now with a look at some of the day's other top business stories. And the animated smash hit film Frozen has provided another set of bumper results for Disney. Merchandise sales, mainly connected to the movie, were up 22% in the last 3 months of 2014, along with a rise in revenue from Disney's theme parks. Profits at the company rose by almost a fifth to $2.2 billion. Sony has cut its loss forecast for this financial year to $1.4 billion after better than expected PlayStation 4 sales. But the company is to cut over 1,000 jobs in its mobile division. Sony has delayed reporting its third quarter results as it counts the cost of the cyber attack on its film division. It says it doesn't expect it, though, to have a material impact on its bottom line. And Toyota has raised its profit forecast by 8%, helped by the falling value of the yen and strong international sales. The Japanese carmaker now expects to earn record profits of $18 billion in the year to the end of March. That's despite a slight fall in sales to 9 million vehicles.
All right, now we're going to talk about McDonald's now. I'm sure you know it. It's that all-American fast food company, isn't it? They're facing challenges, though, at home in the United States. But, Stephen, it appears that here in France, the home of fine dining and haute cuisine, more popular than ever. Yeah,
that's right. We saw the company's global chief executive step down in the wake of their latest disappointing results, when we saw profits slumping by over 20%. But while those sales were falling in the United States, they actually increased here in France. The fast food franchise has particularly French flavour in its outlets here, and it's kept customers coming back. Julia Kim explains.
Plummeting sales at home, customers are turning their noses up at McDonald's America and favouring instead fast food chains promoting a healthier, more ethical image. The number of customers dropped by just over 4% in the US and 3.6% globally. But one country where the brand is flourishing is the home of haute cuisine. McDonald's France has taken steps to carve out its own niche, from its green and yellow logo to incorporating healthier options on its regular menu and using homegrown ingredients in its kitchens.
We serve meat that's a speciality in France, like the Charolais beef. It's only produced in France.
In total, about 75% of the ingredients are domestically produced. Adapting to local tastes has allowed it to make its mark, but the company hasn't always enjoyed so much popularity. Back in 1999, French political figures like José Bové campaigned to close down the fast food giant. Now the question is, can the United States use the same strategies as the French?
De-Americanizing a product in France makes sense, but de-Americanizing a product in America makes absolutely no sense. It's going to be very difficult for them.
But even despite the drop in performance in the US, with 22% of the fast food market share, the group continues to lead the pack.
There we go. Thanks very much, Stephen Carroll, bringing us the day's top business news stories.